Hey everyone, I'm Randa Hoffman, owner and lead wealth advisor at Radiant Wealth Planning. Today, one of the most famous companies in the world is doing something new. SpaceX is becoming a stock you can actually buy. It started trading this morning, and the way it was set up, this is the biggest stock debut in history, bigger than any company that has ever gone public before. So I wanted to make a quick video because a lot of people are going to hear SpaceX $135 a share and think they know what that means. But the way this really works surprises almost everyone. So let's walk through it. SpaceX has been a private company all the way up until this moment. That means only a small group owned it. Think about the founders, the employees, a few big investors. Regular people like you and I couldn't buy in. So going public changes that. The company sells a piece of itself to everyone for the first time. In return, it raises a huge amount of money. That money goes towards building more rockets, more satellites, and more of the technology the company runs on. When you hear that SpaceX is now worth a certain amount, that number is enormous. Think about $1.75 trillion. $1.75 trillion. That was bigger than Tesla on day one. So going public takes a lot of time, and it's closely watched by the regulators. It starts with a filing the company sends to the government, and is the first time the public gets to see the real numbers. And those numbers told an interesting story. So SpaceX is growing fast, but it's also losing money right now. And I want to slow down here for a second. A company can be exciting, it can be valuable, and still not be a profit yet. And it can happen all at the same time. So I always want to tell clients to look at the real numbers, not just the headline. Here's the part that most people never see. Before a company goes public, it goes on a kind of a sales tour. The leaders travel around the world, they pitch the company to the big professional investors. Think of pension funds and large money managers, the kind of investors who buy in giant amounts. While that's happening, the banks running the deal are taking orders. How many shares do you want and at what price? So usually the company gives a price range and the final number gets set at the end, based on how much interest there is. But SpaceX did something different. It picked one price, $135, and stuck with it the entire time. That's bold. That's a confident move. And it worked. So many investors wanted in that there was more than twice as much demand as there were shares. This is what's called oversubscribed. Now, here's the big thing I want you to remember. The 135 price is not the price the public sets. It's the price the company and the banks agree on ahead of time. And that leads to the part where people get wrong. When you read that SpaceX priced at 135, it doesn't mean shares went on sale to the whole world at 135. It means the banks bought the shares from SpaceX at 135. The lead bank here is Goldman Sachs, with several other big banks. Then those banks pass the shares along to their clients. Mostly think about the big investors that were part of that sales tour, and they're the ones who got the 135. And that spot is valuable because everyone expects the price to look different once it starts trading. This deal did set aside an unusual large chunk for the everyday investors through brokerages like Robinhood, Fidelity, Schwab. But then so many people wanted in that most got only a small piece or none at all. So if the big investors got in at 135, what happened when the stock actually started trading this morning? That's the moment of truth. The price doesn't start at 135 and tick up from there. Instead, the stock market runs a special opening process. One bank, it's Morgan Stanley in this case, they work with the exchange, NASDAQ, to gather up all the buyers and sellers and figure out a fair trading price. On a big deal like this takes a while. In fact, the open was pushed back about half an hour this morning because demand was so heavy. And what they do, they watch where the orders are landing. They let the price settle, and then the stock opens at one price and trades freely from there. SpaceX was set at 135. It opened at 150, and with a few hours, it was trading near $168. So picture it this way. 135 was the starting line for the big investors. By the time it reached the rest of us, the price had already moved well past that. And it's why the headline price is never the price you actually pay. And one practical note, on a wild first day like this, prices move fast. So if you place an order without setting a price limit, you could end up paying a lot more than you expected. This is one of those moments where knowing how it works really protects you. I just mentioned Morgan Stanley. Let's spend a minute here because this part is fascinating. Almost nobody knows about it. When a brand new stock starts trading, the price can bounce around a lot. To calm that down, one bank is given a special job for the first month. And their role is to help keep that price setting. We call that stabilization agent, the stabilization agent. And they have a clever tool to do that. And the simplest way is to think of it as a safety valve that works both ways. So if the stock is red hot and shooting up, the bank can release some extra shares into the market. So if you have more shares go around, it helps the price from running away. But if instead the stock starts to drop below the 135, the bank can step in and they can buy shares back. And that holds the price up. So in those few weeks, what you see is not really the total free for all. There's bank quietly working to keep things orderly. Couple more things worth knowing. First, trading on the stock market doesn't mean that every single share is available. Only a portion is actually out there for people to trade. A big part of the company is still held by insiders. Think about Elon Musk. He owns about 80% of the voting control, even after all this. And also the employees and early investors, they usually can't sell their shares right away. They're locked in for a set period. The standard is 6 months. So what this does, it helps keep a flood of selling from hitting all at once. If it all means that when the window opens later this year, a lot more shares can come onto the market, that's something investors really keep an eye on. Now, I want to be straight with you. This is the part that matters most. A $1.75 trillion price tag is huge. Not everyone agrees that it's worth it. One respected research firm thinks the fair value is closer to half that amount. Other firms are much more hopeful about where the company could go in the years ahead. Both of these views come from serious people that are looking at the very same company and the very same numbers. And that tells you something important. A famous name and exciting story doesn't automatically make a stock a good buy. The price you pay always matters. It also helps to remember that brand new stocks can be very bumpy in the first few weeks. Big swings up and down, it's normal. And they're not a reason to act on impulse. So let's put this all together. An IPO is a process, it's not a single moment. The company files its paperwork, it pitches to the big investors, the bank buys the shares at a set price, and the public finds the real trading price on day one. And one bank helps keep things steady for the first month. The price you read in the headlines isn't just the very start of the story. So I hope this helped and clarified a little of the IPO process and what's going on with SpaceX.